Good morning. Welcome to Stock Market Today. It's Friday, May 29th, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today is brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show, as well as give you daily stock ideas. Those are to consider. They hit your inbox every trading day before the market opens. So U.S. equities fell Thursday, giving up early gains with small caps underperforming. At the sector level, the day had a very defensive feel. Utilities, healthcare outperformed, while those cyclicals lagged on the day. Treasuries were mixed, with the curve steepening. The dollar weakened against the euro and the yen. Gold finished up 10 basis points, and WTI crude was higher by 2.7% despite an unexpected inventory build. As we get to the desk this morning, futures are mixed. Let's call them flat. Final trading day of this holiday shortened week here in the U.S. Asian markets were mostly lower overnight, with Australia and Hong Kong lagging. China did manage to gain. European markets are under pressure to close the week. Treasuries are stronger. Curve is flattening. The dollar is weaker on both the yen and the euro in a near-term trade that continues to play out. Gold is up 70 basis points, and crude oil is down about 4%. As we look at the S&P 500, we had a late day fade. Holding support becomes key now, and everyone's going to focus on 3,000. I think the real support level is 2,850 to 2,900. I think as long as we're there, the uptrend remains intact. You could start to play and continue to play for, that, as we said, is the 76.4% retracement of the February-March decline. Should that 3110 level break, I think we're looking at the highs. Now, we are overbought here in the near term. That 13-period CCI and 3-day moving average sending that signal. Chaikin money flow is flat as we oscillate above and below the zero line. So holding support is the key now, right? We've kind of taken out the 3,000 mark, and we held above it yesterday despite a late day fade. Futures are flat today. 2,850 to 2,900 is what we want to watch. 2,750 below that. 2,850 to 2,900 for me is the key. That keeps the series of higher highs and higher lows in place and sets the stage for a move to 3110. Now, what's interesting is at current levels, we're kind of like stuck in between those two ranges, right? Between, you can make an equal case upside, downside. It's a market overbought. I don't think you need to be super aggressive on the long side unless you have some sort of, thrust, but I don't see it right now. Turning now to our market in a minute. What are we writing about today in the note? Well, we faded into the close on U.S.-China trade tensions. Risk themes improve on the week, and that's important. Key signs for this current rotation in the market. We've been talking about this rotation towards cyclicals, towards small caps, right? Away from growth, towards value. Every Friday, we look at some of those themes. Number one, to get a gauge of risk, and number two, to get a gauge of kind of positioning in the marketplace. And we're going to take a look at that a little bit later on. High yield versus treasuries is near key resistance. That's in my note. We're not going to talk about it here on the show. And as I said, futures point to a flat open today. Now, for the major indices, we were lower across the board yesterday. The Dow down 0.5%. S&P 500 down 15 basis points, 87,122 bulls to bears. NASDAQ down a like amount, 29.15 bulls to bears there. Small caps were your big underperformer on the day after a series of outperformance of late, down 2.4% or 2.34%. Bonds actually down, extending yields higher. Let's take a look at the utilities, which outperformed on the day, up 3%. That was what I was talking about earlier when I said the market had a very defensive feel to it. So according to the Chaikin Power Bar, small cap stocks are more bullish than large cap stocks. Major markets across the board are mixed. Now let's hit our stock of the day. Highlighting a bearish opportunity as I see it in Silicon Laboratories, SLAB, has a bearish Chaikin power gauge rating. Weak trend, strong industry group. From a power bar perspective, the semis are okay. But this doesn't look like one I want to be anywhere near. As a matter of fact, if you trade to the bearish side, I think there's potential opportunities. As the stock, as we said, bearish, weak trend below this declining trend line. Now, overbought, oversold indicator beginning to move lower after not even coming close to an overbought condition. At the same time, we are starting to see an increase to the downside of underperformance, right? So relative weakness starting to pick up. So we have a bearish stock beginning to underperform. very bearish money flow. Take a look at that Chaikin money flow indicator for Silicon Labs, SLAB. On top of that, it did trip one of our sell signals here today. So I think it makes sense if you're looking for bearish opportunities, if you're running a two-sided book with longs and bullish ideas and bearish ideas, you can add this one to the bearish idea list, do some work, see where it fits into your portfolio. And I think it makes a ton of sense to be doing the work there. And if you're long the stock, I don't think it makes a ton of sense to continue to be long that stock. Let's look at our sector tracker now. Major sectors over the last 5 days, I guess on the bright side, all is green. So that's good. On the very mixed bag at the top of the list too, right? And it's, short term, potentially signs of rotation. It's 5-day look back period, but it's not often that you see REITs and financials moving together, right? Both rate sensitive in different directions. Financials part of that, but in this case, it seems to me that they're both part of some sort of reflation / economic reopening trade, right? Real estate got hit as a lot of people were paying attention to the mall REITs, commercial real estate, et cetera, right? So did not adhere to its traditionally defensive nature. Industrials, part of the reflation. Utilities, though big day yesterday, that is defensive. No two ways about it. Materials, staples, healthcare, middle of the road. Discretionary comms, tech, and energy, bottom of the list. The question to figure out now is this rotation real, or was it simply a counter trend move and the prevailing kind of higher degree trends are going to start to reassert themselves? I don't have the answer. I'm looking at the data points, trying to figure it out. And identifying the areas within the inflation or reflation trade that make the most sense to me. Right now, that's materials. We've highlighted a couple of opportunities in the materials space for our clients over the past week and a half. I still can't get there on energy, fins, and industrials. As a matter of fact, I'm more inclined to look to the bearish side there in the near term, but I'm still trying to suss that out. Our industry in focus, speaking of financials, bank services, over the past 6 months, disaster is the way to describe it. Underperforming the S&P 500 by 24.5%. Weak power bar ratio, 27 to 11, bears to bulls, currently ranked number 16. Now, it has moved up 4 slots, but this is what I'm talking about when I say I just can't get excited. Community Bank, CBU, very bearish. United Bank Shares, UBSI, very bearish. And Old National Bank Corp, also very bearish here at Chaikin Analytics, right? So a lot of people are talking about this rotation. It's caught a lot of attention. The key is to manage it in a disciplined way, right? I think that if this rotation is real, and I'm looking at the sector level, right? The sectors that benefit from rotation are materials, industrials, financials, and energy, right? If we're getting a reflation / cyclical adjustment, those 4 sectors are likely to see the biggest bounce, right? But looking at it through a disciplined lens, only materials of those 4 sector ETFs, only the materials sector is not bearish or very bearish here at Chaikin Analytics. So that's why I'm looking there. That's why in the past I've identified names like Eastman Chemical, right, for our clients, or actually started talking about XLB in general in my notes, because that's the disciplined way of looking at it, in my opinion. I'm not into the, what's down the most, let me buy that. That's not how I view markets. That's not how I come to markets, right? I'm happy to miss the bottom and own what's quality. And in this case, the materials are much higher quality, in my opinion, than energy, than industrials, and then financials, right? I'm not the person that's out there, buying United Airlines at these levels. KBE is the bank ETF. Now let's take a look at it here. Bearish rating. See, this is what I'm talking about. Bearish rating. Weak trend as we tried to rally and then close below the declining long-term trend line. Overbought in the near term, mixed to slightly bullish money flow, but still an underperformer, right? If this was a stock, I'd be telling you to avoid it. So why should my analysis be any different for an ETF? KBE, I'm not interested. Taking a look at what's trending now, yesterday's S&P 500 movers and shakers are gainers and losers. Dollar Tree up 11.5% following their print. Alexion settlement with Amgen sends that stock higher. Regeneron continues to rebound from a big holder divesting their shares, up 6.3%. Norton LifeLock, NLOK, up 5.4%. No real reason there. And Helmerich & Payne caught an upgrade to send that stock higher by 5%. within that energy space, in which I'm not interested in the least. On the loser side of the board, Hewlett Packard HPQ down 12% following their earnings announcement. Wait a little bit on some of the, I guess call them old school hardware stocks. KSS, no real news, down 9%. HBI, nothing company specific to take that one down 9.5%. Gap, again, this is kind of that, all these, KSS, Gap, Tapestry, they were part of that, lift in the kind of reflation / reopening trade. And that started to come off a little bit yesterday. One day does not a trend make, but just the back and forth is something we're going to keep an eye on. Now let's hit our themes, right? If you think the rotation trade is real, you would expect this line to keep rolling over, right? This is growth versus value, right? Growth over value has been a key theme for us for a long time. And you can see how it ramped up ahead of the start of the new year. Uptrend still very much in track, maybe intact. Maybe you can say it's extended from its 200-day moving average, and that's fine. Interesting to me, you have this bearish divergence near the highs. So if you thought the rotation was real and we were seeing a shift towards value, a shift towards the more cyclical areas of the market, then you would expect this to continue to roll over and possibly even break down. You'd expect the RSI to begin to work towards bearish ranges, and you would expect to see the Qs break down relative to SPY, or really relative to the Dow would be a better analogy here. But so far, this looks like a consolidation or a pullback within the context of existing trends that favor growth, right? Now, it could just be early days in the rotation and it continues to play out. But, as I could view the world from a trend perspective, right, I'm not going to be buying value and selling growth up here, right? It's going to be some sort of breakdown that confirms this divergence that gets me to really change my view, because that would be the data point that says the trend has changed. Right now, this looks like a normal pullback within the context of an uptrend after being extended. All right, that's number one to me. Number two, copper, gold, and rates, right? The copper to gold ratio is what I use as a measure for global growth expectations. And it's been declining, and it's been declining for 2 years, right? This is not something that started with the onset of COVID-19. You've heard me say it before. The copper gold ratio has been going down for over 2 years, right? Line that up with 10-year yields, which have been going down for nearly 2 years, right? That's not a picture of growth in the world, right? So with growth not there, right, slowing at best, probably contracting now, investors have favored the growth stocks, right? When growth is scarce, you're going to buy what actually is growing. And that has largely played out. That's largely driven our view for 14, 15 months here in the market. And a key part of that has been this ratio. Now, what we're seeing here is a little bit of a pickup in copper versus gold. That's coincided with a stalling out of the decline in rates, and that's coincided with that growth to value ratio starting to come off a bit. Now, what I will say is the same thing happened in the fourth quarter of last year as everybody gets excited about US-China trade, and then we fell off a cliff. So this trend is still down. This rally right here for now looks counter trend. I mean, look, the RSI of the ratio is still in bearish ranges. So I'm not convinced we've seen the lows in yields, right? We may grind here. We may even see the 10-year lift, but I'm not convinced we've seen the lows. If I think from a bigger picture trend perspective, looking out 12 months, 18 months, I can see a world where the yields are lower from here, right? So getting back to banks, do you want to own banks in that environment? If you're just looking to flip day trades for 1 month trades, that's a coin toss. That's anybody's guess. I'm talking big picture trends here. And then finally, semiconductors, that negative divergence continues to bother me and would be confirmed with a break of this lower trend line, right? Series of lower highs for the RSI as semis might be beginning to roll over here on an absolute basis, right? A lot of things have had big moves off the lows. Let's watch here. Choppy sideways trading in the near term. That's going to wrap us up. Take us for a test drive. Have a great weekend.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.